All right. Good afternoon, everyone. Good evening, everyone. It's Mark. Thank you for joining me for another Greenbridge Investing market analysis. So in this session, as the title says here, looks like the S&P is trying to really put in that bottom. And I put a list together of a couple of stocks, more than a couple, that I'm looking for longs or anticipating longs for the early part of next week. Keep in mind, good swing trades, or good trades for that matter, come from planning, okay, not reacting. So we may spot something a few days in advance, a week in advance, and we have to be prepared early in order to catch some of these broader moves. Okay, so that's the main point. Plus, I'm going to go over the other markets like Bitcoin and forex and everything else. So you know how it goes. If you have a market or a stock that you'd like to see, please share the symbol in the channel now. So once I complete my analysis, I can go over your chart. And with that, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, this is my Bitcoin chart. And we're going to get to Bitcoin. But I first want to go over the stocks, okay? And the way we're going to start with the stocks is we're going to look at the S&P 500 first. So SPX USD, this is the CFD of the S&P. Now, some people may be confused by this thing because the numbers aren't exactly the same as the futures or the index that you see like on TV or something. Okay, but it doesn't matter because the structure is exactly the same. So even though these numbers might be slightly off, go by the structure, okay? And if you're using futures or you're using like the SPY or whatever it is, hey Chris, just apply the structural information and adjust the numbers. Now look at this thing. This thing right now is at 32.86, okay? It took out the previous day's high of 32.79. That's a good sign, and it's going to close here, what, in an hour and 20 minutes or whatever. If it closes like that, that's pretty good. Now, keep in mind, we have the first of the presidential debates, I believe, this evening, if I'm not wrong. And I don't know how the market will react to such an event, but who knows? It could be a positive, and we may see the Sunday night open gapped higher, not a dramatic amount, but likely gapped higher. Or maybe there'll be a negative surprise in there. I don't know. Point is, anything can change between now and Sunday evening. By the way, Sunday evening is not a good time to make evaluations of a market because the volume is very low and things change. You know, at the 3 a.m. or the London Open, everything is just out the window and you have a whole new thing to go by. So really not a good time to make decisions. All right, either way, this thing is strong. Now, the inflection point that I have here with this box, that's the 3,200 area, right? And as you can see, today's low is 32.17. Yesterday's low was 32.09. That inflection point dates back all the way to here, which was back in June. It was an old resistance at 32.33. So we have an old resistance, new support. Now, so what this overall means for stocks is if this momentum continues, and we start pushing some of these minor resistances in this thing, and we get an attempt at a rally, at least over the next week, this is going to be good for a lot of stocks, okay? Because obviously stocks are going to like it, and they're going to follow the S&P. I'm looking for this inflection point here, and if that's cleared, then we're looking up here somewhere. I'm not anticipating a new high, although anything is possible. With the election coming, I'm expecting, more uncertainty to just come out of nowhere, and we're probably going to see a range in the S&P. That's what I'm expecting, meaning we'll probably get a failed high up in this area, which is, what is that? The 34s, mid 34s, very possible. So, yeah, I know. I mean, the thing is, DJ, it's showing a pretty strong reversal off of an inflection point. So this could be it. At least for the next week or so. Now, one other thing that can happen is if this thing does not follow through and we see bearish price action on Monday and Tuesday, then I'd be looking for the double bottom or the higher low off that 3,200 area. Keep in mind, we have the double bottom in place right now over here. Well, actually, it's a failed low. Okay, this low is not much lower than this low here of 32.28, which was made, what was that, on the 20th? So that right there is what makes this compelling. There is some structure there. So again, it may not follow through, and we may test that low again. If it holds, then I'm looking for these higher inflection points. If it doesn't hold and it clears, it takes out 3,200, then you're looking at an attempt at the trend support around the 3,000 area. So that's what we're looking at, and that's the roadmap for next week. So if that's what the S&P is doing, and the S&P follows through, the reason why I'm so bullish on this, or I'm so yeah, I guess you could say bullish, is because of the way this thing is closing. Okay, after we put in this little double bottom situation, and I'm anticipating this thing to follow through. So let's take a look at a few stocks, okay, that are in good positions. Take a look at Veritone. DJ, I believe you brought this stock up a little while back. And I talked about this in my previous analysis. For those of you that may not have seen it, you could see it here on the YouTube channel. If you just go back and check out Wednesday's video, I talk about Veritone. And I've been talking about waiting for the higher low. And that's what we got today, okay? Nice bullish little attempt here off of a inflection point. I talked about how in this stock, we took out that previous resistance back here, and that this was a possible lower high, but I would be anticipating the higher low because weak stocks don't take out resistances. They make lower highs, okay? This broke the lower high. So that's usually the sign of a change. So at this point, I was actually going to I was thinking about sending this out today to our members, but the thing is, I just don't have time to put it all together. To put the numbers together and then email it out. Like I wouldn't be able to do this video then. So I apologize for that, but I can at least mention it here. So the low here is what, 793? That's where you're measuring your risk from. All right. That means you'd put your stop at like maybe 750-ish, something like that. Never put the stop right at the low of the candle. We took out yesterday's high, what, 839? Right now we're at 842. So it basically just broke. This thing has some room to run. If the S&P goes, all right, this thing has some room. A reasonable test would be this high here of, what is that, 1040? So, what are you risking? You're risking, what is that, about $1, something like that, $1 to go for $1.50, maybe $2. The reward risk makes sense. Now, I haven't looked at the options. I don't even know if this one has options, but this might be worthwhile for options. The thing is, if you buy options, if you buy calls on something like this, you got to make sure you buy at least 2 months out. You don't do front month. All right, they're never a good idea. Okay, cool. So yeah, I like this thing, Veritone. So that's one that's on the watch list for next week, or even possibly today if you feel aggressive enough. I mean, all the structure's there. You got the higher low. It's breaking that bearish corrective move. All right, and you have the S&P making an attempt off of an important inflection point. Always keep in mind, I'm looking at these stocks relative to the S&P or the NASDAQ. I need to see the index doing something similar. Otherwise, some stocks could go on their own, but it really helps a lot when you have the whole market going with you. So there's one. Now, another one that I wanted to point out today is, hold on, it's TEL. Okay, check this out. So similar situation, pin bar low off of a potential inflection point. This one here is more of a market type of stock, right? Look at this. So Very has options monthly. Okay, so I would look at least 2 months out, at least. You could do out of the money calls. You can do maybe one strike in the money. A $10 November 95 cents for a $10 strike. That's not bad. That's not bad. I mean, the thing is, that's kind of, you should probably look at December's or January's. You really should, because in case the market messes around or it wastes time, remember, time is working against you dramatically So I'd probably look at another, maybe the Decembers or, another month out. Now, take a look at TE. This is it's coming off of this support here. I like that pin bar that was developed yesterday. Look, it's breaking the level now. It's breaking the high, 95.35. Just looks very similar to Very, actually. Okay, you have an inflection point here. Of course, you have the attempt at the high. Now, why do I like this one so much? I mean, look at the structure. There's nothing bearish about this at all. Nothing, okay? So this thing is just basically continuing the trend. You need the S&P to follow through. But this thing hasn't even broken any major supports. I mean, it tried with this old resistance, new support. But if anything, this could be a consolidation. So this is another one to keep an eye on for next week. Maybe, I mean, if you can't buy all of these at the same time, and you shouldn't buy all of them, like today or anything like that. I'm just pointing them out because out of this little group, we will probably have a swing trade or two that we send out. But something like this, for example, may give you like an inside bar, maybe next week, or some kind of little minor pullback, which would also be very compelling for a long. So just something to keep in mind. But what I like about stocks like this is the overall structure and that it's trying to attempt to continue that broader trend. There's some potential. Now, even if the S&P does not make a new high, something like this is likely to at least test this high because it's acting relatively strong, pushing that 100 area, perhaps slightly higher. So it's coming, this is basically a higher low relative to the overall structure. You can argue that, it broke this little support over here, but that doesn't really count because that's not a major trend support or anything like that, okay? So keep that in mind. So TE or TEL, the ticker is TEL. Now, there was another one. Actually, let me pull up my list here. I have a list. Let me see. Okay, OPRX. OPRX. This one is a like a pharma type, or all right. I got cut off there, so I don't know what you guys heard up to, but my stream cut off. Sorry about that. It's my great ISP that I have here. So just let me know where you heard where I was. But I was saying with DJ with Very, sometimes it's better to buy more time. Because if the stock does not perform, the time value will decay much slower and you can just get out and have a smaller loss, okay? With options, look, options is very much like a poker game. And the more time that goes by, it's like, you're paying your blinds. But, you can get out early and at least get most of your money back or at least 50% of your money back if the stock does not perform. The advantage to long options is when you get a big winner, you tied up a small amount of money, and basically it's like a home run because you risked very little to make 2, 3, 4, 5 times what you risked. That's the advantage to long options. Otherwise, there's no advantage. They're always facing the time problem, and that's why a lot of times it's better to short options. But in this type of environment where stocks are doing some crazy things, you can make some nice money with long options. You just have to make sure you do certain things like buy enough time and stuff like that. So look, that takes me over here to OPRX. Again, they do something with insurance. I don't really care too much about the fundamentals of what they do. What I care about is this great structure. Look at this thing. So this thing is about to break out of this consolidation here. You're looking at risk based on this range low, which is what, 18 and a quarter, around there, which means if you were to buy something like this would be a good breakout candidate. I'm not a big fan of breakouts, but look at the structure. Like when you get consolidations like this in such a strong trend, typically those consolidations are trend continuation patterns. So this trend is not bearish. So if you get the breakout, this thing can run a bit, especially if the S&P is trying to work its way back up to 3,400. So, you have some, it's within reason. I mean, if we look back here, I mean, this stock hasn't been that high in a long time, right? So it's within reason. If you're risking, where's this thing right now, $20? So if it pulls back $2, right, is it within reason to make $2? Yeah, this thing can go to 22. That's very proportional, all right, and possibly higher. So that's what you're looking at, maybe a $2 risk in an attempt to at least make $2, right? So in a situation like that, what do? If you buy the breakout price is going to be what, 20, so 20 and a half, right? So in a situation, Henry, actually AMD is one of the stocks I was going to mention today, so thanks for bringing that up. In a situation like this, if you buy the breakout, for one, it's a good idea to maybe size it a little smaller. Also keep in mind, we like to use multiple targets, right? So we do that to basically improve the reward risk and to try to capture more of the move while reducing risk as soon as possible. So if we're risking about $2 or $2.50, then we should be making at least $2.50, maybe slightly less on the first target, okay? Your first target does not have to be one-to-one because you have a second and third target. But the closer you can get, the better. All right, so sometimes, we'll put it less. But it's that second target that really makes the trade worthwhile. So, but the first target helps you start taking risk off the table, and you're locking in some profit. So if the trade turns, now you at least have some more flexibility in the position, right? A lot of this is that type of logistical decision making and a lot less to do with charts. So that's what I like about this. Nice breakout candidate, especially if that S&P follows through. So put this on your radar. We may call something like this on the breakout next week, OPRX, okay? Let's take a look at, there was another one I had. Now this one that I have here is kind of similar. It's called X-Ray. This stock, what they do is they make stuff for dentists, okay? And here's the thing. Here's what I like about them. Range support kind of looks like CGC, except CGC broke its range support. This thing is at its range support. That is a one broad higher low, and look at the price action today, right? Trying to take out previous day's high of 43.25. It's trying. So not a bad area. If you're going to take a chance on something like this, this is the place to do it. All right. Again, I don't know if they have options. I think they do. But what are you looking for in something like this? Well, your inflection points or your potential would be the middle of the range because it's likely to revisit the middle. And of course, a more extreme and more aggressive target would be the high, the range high or breakout. But I would rather be more aggressive with the low than the high in something like this, especially if that S&P gives you some follow through. So I really like the location. It is one broad higher low. The structure off of that March low is bullish. So, okay, this thing has a chance of at least testing that high. So what kind of potential are we looking at here? 48.10 is the high over here. And right now we're fooling around, 43.25. So, $2 to $5 of profit potential within reason. It could break out further, but I like to keep things within proportion and within reason. We don't sit here and say, oh, this thing's going to 60 by tomorrow. We don't do that kind of stuff. Now, the low here is 41.59. So you figure 41.25 is going to be somewhere like where you're going to place your stop. So you're looking at, $1.75 worth of risk, something along those lines, to attempt to make about $2 to $3 to $4, something like that. So the reward risk makes sense if your stop is just below this low. So again, I like this one for the radar. The reason why I'm presenting these today is because I want to show you a couple of different ones. Perhaps you could use your own discretion and pick one that you like the most. I would not suggest picking all of them, okay? It's not a good idea because if the market does not follow through, they're all going to be red. And you don't want to be overexposed like that. So I have to mention that. Now, the other one that I wanted to mention, one more, is NYCB. Now, this one's really aggressive, okay? It's really aggressive because the chart is not looking good at all. But look at this level. And not only look at this level where it is right now. Look at that. So this is basically going for the failed low situation. Now, you're fighting a lot. There's a lot going against you here. But it's gone below its April low, and it's now trying to reverse. This is aggressive, but if these counter trend trades, when they work, they usually pay well, okay, because they have so much potential to run. Those are your inflection points that you're basically looking at, which you could measure potential off of. So something like this, like I said, I have to keep emphasizing, it's aggressive. This is probably the least likely one to work out compared to the other ones that I showed you. But if it works, like I said, I believe this one has options. So, you can buy calls on this thing, and it's also a pretty inexpensive stock. I mean, it's an $8 stock. It's at basically around 8.25 right now. If it takes out the 8.25 high next week, that would basically justify a long. And your first target would probably be around that midpoint, which would be around here somewhere, which is like 8.5. So, I mean, that's not huge, but, it's a good start. And then you're looking at like the $9 area, and then like the 9.25. So it's not a big mover. Obviously, you would have to use a little more size, So maybe if you only normally do one call option, you do 5 or something like that. But again, this one is very aggressive. I just liked the failed low situation and the likelihood that it can bounce. I mean, if you look at these previous bounces, I mean, look at this stupid thing. I mean, that's just in a few days, right? Look at this bounce over here. So when it bounces, the thing bounces. You just have to be able to take your money off the table quick when it does something like that. That's also why it's interesting, okay? So that's more of the gamble right there. All right, now, so those are pretty much the ones. Oh yeah, and AMD. AMD was on my list. I mean, Henry brought it up here, but AMD was on my list. I was going to mention AMD. So I'll go over that one, and then I'll get into, actually, I'm going to go into that one, right? Then we're going to take a look at Bitcoin, in the forex pairs real quick, and then I'm going to get into your questions. So again, thank you everyone for asking your questions. Now, this is AMD. I like this one a lot. Obviously AMD is a market stock, meaning it's going to be very sensitive to the NASDAQ and the S&P, and it's most likely not going to do its own thing. Look at this double bottom situation right here. I like that a lot, okay? I like today's attempt at closing strong. Again, following the S&P. What do you think the S&P is doing? That's why I showed you the S&P first. Okay, this thing takes out this little lower high right there. What is that, 76, 78, 63? It starts pushing that, then this thing is likely going to have a bullish leg. Okay, and where can that leg go before running into problems? Well, you have this old resistance right here, around that 86.5 area. So, that's you're looking at least, what, 6 to 8 points possibly before it even gets there. Something like that in this area here. And that's where I'm anticipating like the S&P to fail. Okay, when the S&P is at its equivalent level, that's where I'm looking for the S&P and NASDAQ to give us problems, especially as we're getting into the election. So this would be a good try. Like I said in the chat room earlier, with the S&P trying to bottom like that, conservative swing trades, they're worth a try here, okay? They're worth taking the risk, because if they go, and that NASDAQ and S&P, if they run at least for a couple of days, at least into midweek, that can give us something worthwhile. Remember, next week is the first week of the month, and most likely Friday, sometimes they change it around a little bit, but Friday is going to be NFP, okay? So non-farm payroll, sometimes going into that, especially if they're anticipating a strong report, can get, as it gets priced in, you can see some strength in the market possibly. Especially since the current administration, it's in their best interest to show good reports. Okay, so just something to keep in mind. The election is an important factor when you're trying to time the market, because of the uncertainty and because things can change really fast. I was explaining the other in my other session, I was explaining that my broker, one of my brokers, Interactive Brokers, sent me an email recently saying that they're changing the margin requirements again. They're adjusting them, obviously less favorable to me and their customers, because, and they mentioned the election. They actually mentioned it in their email. So that just goes to show that they're preparing for wild moves as well. Now, so that's AMD. All right, so I definitely like it as a long, and we're possibly, we're going to call out of all these stocks that I just showed you, this is like what's on my watch list. We will probably pick one or two of these for early next week and send these out to our members by text and by email. So I'm showing them to you now. You're getting an early look. Perhaps you want to position early in them, but that part is up to you. If something changes between now and Monday, that's the risk also that you have to face, okay? But also to your advantage is if you get in early and there's a gap on Monday, well, then you're in. So you have to figure out what works better for you or what you're willing to risk. Now, one other thing I wanted to mention on that note, if you're new to Greenbridge investing, I didn't even mention this yet, so I have to mention it at least once. If you're new to Greenbridge investing, please make sure you check out our website at greenbridgeinvesting.com. There's a bunch of links in the bottom of this video here in the comment section, so you can take a look at those links. We have swing trade signals by text and by email. We have portfolio management ideas, and we have a chat room where we're sharing insight and perspective throughout the day. Now, keep in mind, we offer swing trade signals. So those are not signals every single day. Those are, maybe 2 or 3 we get per week, and that's across all the different markets that we follow. So like, for example, we may not have a trade in Bitcoin for 2 weeks. It's possible. All right. So speaking of that, let's take a look at those. Let's look at the other markets real quick, and then I'm going to get to your great questions here, everyone. Okay, so again, thank you for asking. Now, Bitcoin. So Bitcoin's been a little funky, right? So I wrote this analysis like almost a week ago. I talked about these inflection points, and look, it's been trying to stabilize around this first inflection point, which has been on my chart the entire week. So how did I know that? I didn't know that. All I know is there's a chance that this area will see some type of potential change. And now the market is proving it, okay? It's staying around my box. So with this kind of price action, this is a tough spot to go long. I mean, today's candle earlier didn't look so good, but now it's developing into a bullish pin bar. Something like this off of such an area can justify a very aggressive long, okay? Now, because we have an inflection point, we have a little mini failed low right here. This is a little mini one. This thing tends to be following the stock market right now. And obviously the stock market's trying to bounce. So, thanks, photo guy. I have to mention it though, just as a disclaimer. Anyway, so this could turn into an aggressive swing trade long. And why do I call it aggressive? Because this is not the greatest probability location. I would rather have seen, a much more defined double bottom, something like that over here in this area, retest this low of the 10-200 area. I'd rather would have seen something like that to really confirm. So that's why this is tough, okay? But it may turn into something like this where it fools around, and then you get a nice leg. The thing is, why is it even worth taking? Why is it even worth considering? Because the overall structure is not bearish, okay? There's nothing bearish about this. So when that trend asserts itself again, you're going to see, the first thing you're going to see is a break of this high, all right, which is, what is that? The low 11K area, right there. That's the first thing it's going to do. So we may not touch these other inflection points, and this may be it. I don't know. But if we get the structure, like we have some structure here, I'll talk to Andrew about it. We might send this out tonight. I don't know. So, I say that sometimes we don't do it. We choose not to, because again, we always have to be mindful of our members. We don't want to sit there and put like these super aggressive trades out there and then watch everyone get stopped out. Like, it's just not something we like to do. So I'd rather miss the move and wait for a better setup and get people into a setup that has a better probability. I know a lot of people get impatient and they get upset if it runs without us, and they're like, well, what do we pay you for? Aren't you supposed to be getting us into good trades? Well, yeah, but it doesn't mean you're always going to catch every move. So just wanted to point that out, but I'm liking it the way it's developing. Now, also another one, NEO. Look at this. This thing has been a little unusual. Look at this. So it gave us a buy signal. We didn't call this, by the way, because I don't like these really long candles like that. But it tried to move in ahead of Bitcoin. which is interesting. Now we're getting this bearish candle. So that's why I don't like to rush into altcoins, because as compelling as they may look at times, I mean, this could have been on some, some dumb news that people react to. As compelling as it may look at times, they still don't run on their own. So if Bitcoin is not leading, or Bitcoin is not taking out any kind of high or giving us a clear buy signal, then a lot of times this is going to be noise. But I definitely would like to keep an eye on NEO as a potential swing trade long, especially if it gives us the double bottom around this level here. Okay, which is what, the mid 18s, somewhere around there. After this pin bar, I'd be looking for something like that. Okay. Now, what if you had gotten long something like this and this pin bar develops? This is a tough choice, but a lot of times it's better to just get out. If you're, instead of taking a big loss or a bigger loss, if it takes out the low of the pin bar, 2086, so basically like the 20.5, a lot of times you're better off taking the loss, exiting, and if it turns back around, you get back in. Okay, so just something I wanted to mention there. So just a couple of those. Let's take a quick look at some forex pairs here. So I'm going to start with the dollar franc. By the way, if you're new to the Greenbridge Investing channel, which I didn't mention, make sure you register for the channel here so that you get a email notification every time I do one of these. And also, like the video if you like it. And also, if you can, if it's not too much trouble, please share the video with your social network. That really makes my job a lot easier, because one thing we're not good at here is marketing. That's just not our expertise. So, and we can always use a little help in that area. So just by sharing it with your social circle would be greatly appreciated. So now, forex, dollar franc. Now this thing, look, it's like going relentlessly higher now, right? I believe the Swiss National Bank had their interest rate decision yesterday evening. I think it was yesterday evening. Either way, this thing has been vertical. Okay, so if you're in a situation like this, there's nothing to do but let it run. Okay. The other one that we actually have is the dollar Canadian. All right, there's a dollar Canadian. This one's hesitating a bit, but look, it's still strong. So I believe that trade is still active. This trade information, that's not the trade. That was an older trade. Andrew sent out a more recent trade, and it's been working well. Now, these trades came from, and I keep showing this, which is the dollar index, because that's basically, you're in the dollar, you're long the dollar. And when this index pushed a higher low, okay, when it developed that higher low, that was it. And coincidentally, this began with the FOMC meeting recently. Okay, it was around the FOMC meeting, and then this week, Chairman Powell spoke on Tuesday, Wednesday, and Thursday. And since he's been speaking, along with the Treasury Secretary yesterday, the dollar has been going vertical. All right, so we've been anticipating this dollar bounce for quite some time. We were actually a little early on it, but here it is. So now you let it run if you're in it. So, that's the next inflection point, which is around the 95.75 area. We'll see if it can get there. But at this moment, there's no reason to short the dollar. Let this thing run. So now I'm on Forex. I'm going to answer some of these Forex questions in here. I saw a couple of Forex questions. So I have, photo guy, Aussie dollar. Sure, I'm going to take a look at that. Let's take a look. AUD, USD. So just like the euro, right, this is against the dollar. So this is going to be weak. And this looks kind of similar to the euro and the pound. And as long as that dollar is pushing toward that 95.75, I would expect more weakness out of here. You have an inflection point right there at 70.42, okay? Basically like that 70.5 area, but way too early to buy. For one, you have no stability. There's no price stability here at all, right? And with the way that dollar is looking, I would expect this thing to just keep pushing lower until there's I want to see a clear reversal structure. I've talked about recently that when it's coming from a lower high like this, a single pin bar will not be enough to justify a long for a swing trade in this situation. So, like, look, I'm going to pull up the euro dollar, which is very similar. Look at the euro dollar. There was a guy, I wrote a report on the euro dollar actually as a long. I was wrong. And there was a trader in there that said he was going to stick to his short. He said he's going to defend his position. And I forget who it was. It was on TradingView. And I went to say, wow, nice job sticking to your plan. That's a mark of a good trader. Nice job. Like I came out and said it was a long. The guy was short and says, I'm sticking to my short. Nice job. Because this thing, sold off, and he wasn't distracted by my information. He wasn't distracted by anything I said. He stuck to his plan. He stuck to what he saw. And that's the kind of conviction you have to have. If you're wrong, you're wrong. One of us is going to be wrong. And that's what makes a market. Okay? So your chart looks, so this is a daily chart. All right? I always look at daily charts with these. And usually our trades are based on daily charts. So that's the thing with that. All right, so it's something to keep in mind. This thing, the momentum is bearish. Yesterday, it tried to give us a pin bar, but now you can see why. I'm not interested in single pin bars. If we were in a bullish configuration, I would have been interested in something like that. But we didn't even think about sending this one out because of this situation. So, bearish close, not looking so good. Just let this thing, stand aside, let it do its job. If you're short, if you're not short, nothing to do here. I wouldn't short it now either. Just, one thing you can do is wait for the next short signal, which can take a few days to a week to play out. Remember, we're going into NFP next week. So this thing, might see a bounce, but it's not worth, a swing trade. It's not worth taking that type of risk. Okay, like I was explaining to someone earlier, our average stop on these things is 100 pips to 150 pips at times. We're not taking like 20 pip stops on these things. Okay, so all right, so that's forex. Now, before I move on and get to the rest of your questions here, I just want to explain gold real quick. All right, let's take a look at gold. Now look at this situation. So we're getting these bullish pin bars on gold, but just like I was explaining with the euro, like if we were in a more bullish configuration, meaning if we didn't have this right before us, I would be interested in something like this as a possible long. We do have other things going for it, like it's at a range low. It's at a very important inflection point here. That's a proportional trend support, okay, around that 1840 area. But the thing is, with that dollar strength, this thing may test 1840. I know it may be hard to believe, but gold is very tough to trade when you're trading with leverage. So I would rather wait. If I'm going to get long gold, I'd rather see a supportive structure develop, not two little pin bars. It's just not enough. It may bounce a bit, but as you can see, it's tried to bounce a bit a few other times. And when it turns, it gets ugly, right? Like I don't want to get caught in one of these situations where it tries to bounce and then it just stops everyone out. I'd rather wait until momentum is confirmed. Often, waiting for confirmation means you're not going to get the best prices. So you're not going to get the bottom. But trying to get the bottom can be a very expensive process because you try, you get stopped out. You try again, you get stopped out. You try again. I mean, look at our dollar Canadian pairs over the previous month. I took that trade 3 times. I got stopped out 3 times of that stupid thing, okay, trying to find the bottom. So it's just not worthwhile. So we'll just wait for that one. Okay, so I just wanted to mention that. Now, some people may say, well, screw it. I like gold. I'm getting it. I'm going to buy it, take it in an aggressive long. That's up to you, but this thing is not giving us the right structure. These little mini pin bars could actually be a continuation pattern, a momentum continuation pattern to test that 1840 low. I'd rather let the market prove itself. Okay, so just a couple of things there. So let me get into your questions now. How am I doing with time? Let's see here, 39 minutes. Wow, that's a lot of time for me talking about my own analysis. All right, so let's get into what you guys have. So very, we looked at very before. Okay, cool. Thanks, DJ. AMD, okay, covered that. Christian, hey, Christian, how much do you make profit in the first target and second? All right, that's a good question. It depends on the structure. It depends on the instrument that we're working with. Okay, but typically, the first target, we try to get, I mean, just a rule of thumb, we try to get 1-to-1 reward risk, sometimes slightly less, okay? But target 2 should be more than 1-to-1 reward risk. So you should be at least 1.5-to-1 or 2-to-1 reward risk. That's one good way to set your targets, but also we consider the structure of the market, what we're dealing with. Is it a very bullish structure? Is it a range bound structure? That's also going to shape where we place the targets. But we have to be aware of the reward risk that we're getting, right, for the targets that we choose. So again, that first target should be around 1-to-1. If it's slightly less, okay. Because the goal for target 1 is to take some profit off the table and reduce risk. So that if the thing fools around a bit, there's a good chance for one that you're going to reach the target. Secondly, if it fools around and goes back to break even, at least you have a little flexibility now. And you still have some profit that you're dealing with. Even if you give some of it back, it just makes the whole situation, it makes you a stronger hand. Let me put it that way. So the second target should be probably 1.5-to-1 or closer to 2-to-1. Okay, just to answer that question there. So thanks for the question. Now, okay, so photo guy, we got Aussie dollar. Okay, DJ, X-ray 45 for the 45 call, $2.83 for X-ray. That's not bad. Let's take a look at that one again. That's the they make the dental supplies. I mean, off of that range low, right? Wasn't this thing a little lower when I looked at it just a few minutes ago? 43.22 was yesterday's high. This thing's at 43.45, right? So we're basically a play off the range low. So DJ is saying the $45 call, which is basically the middle of the range, you can get that for January. So that's plenty of time for this thing to reach 45, and that's $2.83. So you're risking for one contract to control 100 shares, all right, which would cost you $283 to control 100 shares of an out-of-the-money call, all right, which means it needs to have any intrinsic value. Price obviously has to go through that level, but if it does, that $2.83 is probably going to be worth closer to $4 or maybe even higher at that point, the faster that it can do it. Okay, the advantage to buying more time is you're giving the market a chance to accomplish that. That's why we always speak against buying front month. What if you buy the next month or a couple of weeks, a week or two out, and this thing fools around? Your premium will vanish. So, not bad. I like that one, DJ. Maybe we'll send that one out as an options call. Now, NYCB, the $9 call. Wow, 40 cents. But it's because that stock is hated. Okay, that's why I liked it, and I believe there was some unusual options volume. I think it was in that one. That's why I think it came up on my radar. But this thing, 40 cents. That means with $40, you're controlling 100 shares of an out-of-the-money call. If this thing pops, and as you can see, it's popped before plenty of times. If it pops, that could turn into almost like a home run, because it's costing you 40 cents. If you're wrong, you're losing $40 per contract. But if you're right, I don't see how you can't double on something like this, right? To make 80 cents or maybe even $1. That's a home run. In those type of situations, though, you have to take your money off the table if the market delivers. It's really a gamble, especially in this type of stock. But wow, that's cheap. So thanks for pointing that one out, DJ. Not buying because it's cheap, because it has, right, when it pops, it pops. So, okay, pow, not enough, not tough for me. Looks like one that, okay. So yeah, I'm not sure which one you're referring to there, pow. So let's see, Jeremy, XMR, let's take a look. So that's Monero, I believe. By the way, for those that want to see altcoins, I recognize that one. But just make sure you put USD or USDT after it so I know, because otherwise I'll spend 20 minutes talking about a symbol that you don't want to see. I've done that a few times. So anyway, I recognize Monero. Now, so I like, Andrew talks about this one a lot. He's a fan of Monero. You have a nice higher low right there off of the 86, basically high 86 area. That's a bullish sign, okay? It took out this high right here of 94.25. This is a buy signal. Now, it's obviously going for the breakout, and it's going ahead of Bitcoin, because Bitcoin doesn't look like this. Okay? Hey, Michelle. Bitcoin doesn't look like this. So this thing's obviously leading, or it's acting relatively strong. I like it as a long. The question is, what's the risk? And what if it doesn't break out? So your risk is going to be measured by, so 86.93, you figure you're going to put your stop like around 86 and a half, something like that. And right now you're at 94. So you're looking at like 8 points of risk, something like that, 8.5 points of risk, which, you know, could be a lot. But now, so what's the reward though? Well, for something like this, let's just see the most reasonable inflection point. If you break out, right, you're looking at this. Let's look back a little further though. Let's see what we have historically here. Sometimes it helps, you know, just to look back and see what, you know, these inflection points still have value. That's why, you know, it pays to look back this far. As you can see over time, like look at this inflection point over here, that 98 level, okay? What, 6 months went by and it reacted off that level. So those levels do have value. So going forward, you know, to where we are now, you're looking at those type of inflection points from, you know, historical points there. So what is this here? 105, what's the high here? 105.99, so 106. So you're trying to make 10 points at minimum and you're risking 8. So you're going to be slightly over 1-to-1. That's if you're buying it now. If you wait for the breakout, it's going to be worse. So I'm not a big fan of the reward risk. In a situation like this, I mean, it depends on what your risk appetite is, but I'd prefer, on something like this, I'd prefer to get a better price. Now that's just me, but I would rather see a higher low develop or a test of the low. I don't know if the market will deliver that. And if it doesn't deliver that, then I just don't take it. Okay, there's other opportunities. This isn't the only one. But I just prefer a better setup than this. But the breakout can go. This would be especially nice if Bitcoin goes with you. Okay, because this thing is obviously acting relatively strong. So those are some of the things to consider. Now, also, it could break out and go further. I mean, it's possible, which would then, you know, be much more favorable for you. But these inflection points here are initially what you're dealing with. So often it's a good idea to base your reward risk on what's within reason. And then if you have, like, say, for example, you know, you split your position into thirds. Like that's what we always do. We take a position and we have 3 targets. So perhaps, you know, you're exiting 1 or 2 targets going into the inflection point. And if it breaks further, now you can just let it run and see how far it goes and just trail or something like that. And that's what, you know, that's how you get a nice win. So just something to keep in mind there. But the structure is bullish and you do have a buy signal right now. Okay, so that's how I would look at that one. Also, I gave you your points of risk. So thank you for bringing that one up. Okay, XMR. So Christian, how about XTZ? Sure, that's Tezos, XTZ. Now this one has been more sensitive to Bitcoin, it seems. Like when Bitcoin was looking ugly, this thing looks uglier. I've talked about this a few times in previous sessions. We had that lower high here, okay? And then it tried to push this low and it delivered, looks like a failed low relative to this low here. It didn't go a whole lot lower. Let's see, what is this low? 221. And what is this low? 193. Okay, that's not a huge amount lower, okay? So I would consider that a failed low. And it reversed, all right? So, and it took out yesterday's high of $2.18 was yesterday's high. So you do have a buy signal in play and it's off of a failed low. The thing is, just like that NYCB chart that I showed you, you're fighting this momentum. Okay, you're fighting that. So if it works, you get a great price. But probability favors a lower high at this point. Why? Because unless Bitcoin can help this thing break out, it needs to clear this resistance here before the structure changes. All right? And that resistance is 269, around there. It needs to clear that to prove that the structure is now bullish. Okay? What's a bullish structure? This is a bullish structure. Right? See how this level here broke this resistance back here? Meanwhile, you know, you had to wait through all this mess. All right? You had to wait from all this and all this. And more importantly, you had to watch this thing go higher and not get in. Or if you wanted to wait for confirmation, that took about 2 weeks or 2.5 weeks. So I'm pointing that out because this is in a similar situation. you may have a bottom here, okay? That's an aggressive place to get in if you're interested in it. Or you can wait for the confirmation, which can take a week or two. Perhaps you get the break of that resistance, which would be your confirmation, or perhaps you get a higher low sooner, which would be another form of confirmation, and then break higher. Those would be a little bit more conservative ways to play something like this rather than taking it now. But as of this moment, I mean, it's a buy signal, just a very aggressive one. It would also probably be helpful if Bitcoin follows through as well. Keep in mind, these things do not trade on their own. They may look like they do at times, but Bitcoin is still the leader. So if Bitcoin does not follow through, you're gonna see this thing test the low again, okay? Or maybe give you that higher low. So just some things to consider. If you're okay with that, that's fine. But the more conservative thing, like I said, is, I would wait for the breakout there. I don't care if I miss the initial move, because if it's going to be a broad move, there should be a momentum continuation pattern that I could get involved with. All right, so that's Tezos, XTZ. Thank you for bringing that one up. Now, IMDB. Oh, you know what, pal? I was looking at this one, actually. I was looking at this one yesterday. This one's been on my radar for some time. We've had a position in this. Man, when this thing moves, it moves also. It's trying to break out again. I like the higher low a lot, okay? I like that. You have the stock market going with you right now. If the stock market follows through, now this one is not as sensitive to the stock market. So if the S&P has a big move, a big move higher, this one is just going to do its own thing anyway. Stocks tend to have their own, compared to altcoins, stocks tend to have, a lot of them tend to have their own personality because they're being driven by different factors. Like the pharma stocks are very, very news sensitive, and they're being driven by very particular things. Excuse me. And they're not going to be as sensitive to a broad move in the S&P. Okay? So something like this, which is one of those type of stocks, they do something with medical devices or something. I don't know exactly what they do. But this thing tends to do its own thing. Keep in mind, the S&P all this time was like pushing higher and higher and higher, and this thing was just doing nothing. All right? So I bring that up again because whether the S&P has a great move or not, this thing is likely to just do its own thing. You have that breakout potential right there, which is what? 37, high 37s? Oh, I'm sorry. I can't see. I get the wrong one. Sorry, pal. All right, hold on. Good thing I saw the chat there. INMB. Okay. I still like in mode also. But all right. So, immune. So like I was saying with news, okay, these things are news driven, right? Look at this move. So that's, again, senseless. By the way, when you see moves like this, when you see like really crazy moves, that's when you must stay away. Unless you're in it, you must stay away from these, okay? Because this attracts all the people who don't know any better, and they buy up here because they think it's going to go, to 100 or something because they read some news somewhere. This is a place to sell when it goes vertical. Anyway, since then, it looks like it's found some stability, developed a double bottom or triple bottom off that $8.5 higher $8 area. Nice. And you have a higher low right here. So, and it also took out this high, which is a great sign. And the entire structure itself, okay, the entire structure is one broad higher low. I mean, looking back there. So not a bad idea. It's definitely showing signs of strength. Took out yesterday's pin bar high of 1039, and today it's at 1075. Not bad. Not a bad idea for a long. Next question, when I see something like this, the first question I ask myself is, well, what kind of risk am I looking at? So I look at this low over here, the pin bar low, and that's 972. All right, so you figure 950. So I'm looking at $1.25 of risk if I buy it right now. If I'm wrong, I'm losing $1.25. If this thing continues and breaks out, what is my potential? Well, let's see. I'd be looking, first of all, I'd be looking back at some of this structure over here. You have that inflection point, which is not really that great. You have somewhere in here, so 1224. So you're looking at, about $2, almost $2, and then possibly maybe $3 or $4 if it can get into this area. It's worth the risk, but you're not looking at super attractive reward risk. You're looking at close to 1-to-1. It's probably like a 1 1/4 to 1 type of thing. Not bad. It's acceptable. So yeah, if you're into this, I like it. Okay, I definitely like it as a long. It's got the structure, and it meets the qualifications. So, and the risk isn't too bad there. Nice. I don't know if they have options. If they're not a very, I don't know how old this stock is, but they may not have options. Something like this, especially if it moves quickly, if it gets something like this going again, which obviously is news driven, then you can make a lot of money with options in this type of situation. All right, but there's no guarantee you're going to get something like this. This comes from news, and it comes out of nowhere. These are like lottery tickets. So even if you could get halfway there, that would be a nice win. So nice one. Thank you for bringing that one up. Immune. Now, Pau is asking about BE. Let's see, what's BE? Oh, energy. Okay, so let's take a look. First thing I do is I'm looking at inflection points. By the way, I'm going to just make this announcement now. I'm probably going to do a webinar, a training webinar tomorrow. I usually do them on Sundays, okay? But I can't do it on Sunday. So I'm probably going to do it tomorrow around 4 p.m. Eastern time. If I do, I will send out an email tonight. I'll send out the invitation to all of our members. Okay. So whether free member or paid member on Greenbridge, make sure you're signed up. You'll get the email notification. If you could make it, great. If you can't, no problem. There'll be a record of it, on the YouTube channel and all that, and you can always go back and check it out. But tomorrow I'm probably going to do one, most likely, like I said, and it'll be on some important concepts of technical analysis and trade setups. Okay, so back to Bloom Energy. So here's the thing. You have this range bound situation. Okay, the overall structure since the March low is bullish. Okay, not bad. Now, as far as where we are now, we can argue that this is one big, broad, higher low, but the current location is in the middle of the range. So these are lower probability areas. I don't like the location. If I was going to do something with this long, I'd rather see it here, or at least closer to that area, which is around the 12 1/4 area. Even though you can argue that you're getting a little bit of a higher low and all that relative to this previous structure, the problem is this is a consolidation, and it's not exactly, this trend is not exactly in full swing, So I will view this as more of a consolidation, and I'd rather see a test of the range low. Also, there are many stocks that are in much better configurations than this. So why take something that's 50-50, when you can get something that has a little bit of a better probability. All right, so cool photo. Yeah, I'll send out that invitation by email. I have to set all that up. Again, if I don't do the webinar, then you're not going to get an invitation, okay? So you'll know by tonight. All right, so Michael, you ask a lot about what to do for improvement. Maybe you can change the setup a bit to improve you reading fine print, like change the resolution of the screen or something. Oh, what do you mean? Like so that you guys can see better? I'm not sure what you mean by that. Is the resolution too high? Because I don't know how I would do that without changing how I send this out. So I'm not sure of your question there, Michael. Do you mean change my screen resolution so that it's bigger for you to see? I mean, because one thing I could do is I could just make the charts just bigger like this, and we can see, and I can read the detail. But changing the resolution on the screen would probably make a mess for me on my side, because I have a couple of monitors going on here. I know I could probably change it for one individual monitor, but it might mess up my workflow. So I don't know. I'll consider that though. Thank you for the feedback. I always appreciate feedback that can help improve, your experience. All right, so that's pretty much I pretty much covered all of your questions here, I think. Do I have any other questions as far as market you'd like to see? How am I doing with time? I know I talk a lot. Let's see. Wow, an hour. That was quick. Okay, do I have any other questions? Today's Friday. I know a lot of people probably just want to go to sleep, especially if you're in the Eurozone. Let's see here. So, okay. Yeah, I mean, that's pretty much what I have today. So like I said, if you're new to Greenbridge, make sure you check out greenbridgeinvesting.com. We have swing trade signals by text, by email. This is a 7-day free trial. If you go there and you sign up, you can check us out for a week, see what you think. We also have portfolio management ideas, which we send by email, and a chat room where we share perspective and insight each market day. Now, also register for the channel here if you like it, so that you get email notifications from YouTube. And if you like the video, press the like button. It always makes me feel a little bit better. And if you can, please share the video with your social network because it really helps us out a lot. So I appreciate all that. So Michael, well, I don't know for others. I can see the bars good. Okay. But, okay. So, right, it's the numbers, right? Right, the numbers, they're very small. I know, because I have a very high resolution here. I understand. I know that the number, and I can't really make those bigger, right, unless I play with the resolution. Well, I'll take that into consideration, Michael. I'll see if I can do something with that to try to make it a little more readable. But yeah, if it like affects my workflow and I can't do this like the way I'm doing it, then I don't know if I'll be able to, make that type of change. But I'll look into it though. All right, so thank you for the suggestion. No problem. All right, everyone. So if I don't have any more questions, again, watch for that email tonight. I'm looking to send that thing out tonight for the invitation. It'll be at 4 p.m. Eastern time. If I do it, it'll be at 4 p.m. Eastern time tomorrow, and I will keep it at an hour. Okay, I'm not going to do 2 hours like sometimes I do because I need to keep it at an hour just so it won't take up your whole day. But people keep me in there and I keep talking. They like to hear me talk and then I keep talking. It's like a cycle. But we'll work at an hour, and I want to really focus on some important concepts that will really help you build more of a foundation of confidence, and also the mechanics of our setups. That's really like the whole gist of the whole thing. So you get a sense of, when we talk about these setups, you have a clearer understanding of them, and once again, it'll give you more confidence when it comes time to taking a position. Without confidence, you can't even play this game. Okay, you're going to trade scared, and you can't make money that way. All right, so that's the idea. All right, everyone, cool. How about a Zoom? Well, photo guy, I'm working on something. I may do something like that, where I'm working on. It's just funny you bring that up because I am thinking of something. But I don't have anything to talk about yet. So when I have if I put a concept together that makes sense, I'm thinking about doing something along those lines, but we'll see. All right, so thank you for bringing that up. I won't be able to do something like that for free though, by the way. I'm just letting you know. So I have to see if what I can do makes sense and if it makes sense to our members as well. All right, so thank you very much for the recommendation or for the suggestion. So I'm going to leave you guys with that. So I'm going to wrap this up. Thank you all for your participation and your great questions. If I missed one of your questions, please just put it in the chat again, but I don't think I missed anyone's questions. Oh wait, Jeremy asked a question. Here on. Can you define a stop loss for taking an aggressive Okay, hold on, Jeremy. I just saw your question now. I'm just looking back here real quick before I turn this thing off. Thanks, Photo. I appreciate that. Can you, all right, so Jeremy, I don't know if you're still there, but I'm going to answer your question since I have Bitcoin up here. An aggressive stop loss? Well, so here's the thing. If we have an aggressive trade, it's most likely going to have to be based on this low right here, which is the 10, probably around 10,250, 10,130, 10,138. No, I'm sorry, lower. It's going to be probably around 10,125. It's got to be somewhere below this swing low. All right, because if this thing is going to stay strong, that higher low should stay intact, and price has no business retesting it if we're going to get a follow through of momentum here. So the stop would have to go somewhere around there. You know, if you want to be a little tighter, you could look at a 12-hour chart and look at the structure on a 12-hour. Oh, hold on, this is a 12-minute. Hold on, 12-hour. And you can look at maybe the lows of these previous candles, but that's going to be really tight. So 10.553. So you figure 10.5 even, 10.450. That would be very tight, okay? And that's likely to get stopped out if there's any noise or any fooling around here. So those would be two aggressive areas to place a stop. Because remember, when something is, if this momentum, this bullish momentum that it's trying to demonstrate here, if that continues, it has no business looking back, because momentum is momentum, right? So it should continue higher, it should follow through. So those would be the two areas I would think of for an aggressive stop. But keep in mind, the tighter one is very likely to get stopped out, where the further one, you know, is less likely to get stopped out. But if it stops out, that's not going to be pleasant. Okay, which means you're going to have to make sure your targets are set proportionally to that. Okay. All right, so that answers your question there. Again, if I missed your question, if I missed someone's question, please just ask in the channel again, or just ask me next time. It's just these things go by and sometimes I just don't see the questions. All right, so that's it. I'm going to leave you with that, everyone. Enjoy the rest of your Friday, wherever you are in the world. And I will see you next time, possibly tomorrow or in the chat room. All right, everyone, so enjoy the rest of your day, the rest of your evening, and I will talk to you then. Thank you.